To the channel. Today is Wednesday, August 14th, 2024, and thank you for tuning in. A quick market check. The S&P is up 20.78. The Nasdaq is down 15. The Dow Jones Industrial Average is up 285 points. What's interesting is the VIX is all the way down, back down to 16.30. As we knew, we went through the turmoil about a week and a half ago on that Monday when the market was down over 1,000. The Japanese market was down 13% in one day. The VIX had jumped all the way up to 67. Normally, if the VIX hit about 40, that means we're right at about maximum volatility. We blew right through that. We blew through 40, hit 67. But here we are, almost with the market all the way back to where it was at. The Nasdaq went down in the correction territory, down 13%. The S&P and the Dow was down about 6%. That wasn't a real downturn to me. That wasn't a real downturn. But it was the Nasdaq did have a correction. But what I believe this is, because the economy is still doing terrible. The economy is doing terrible. But the stock market is not reflecting on how bad the economy is actually doing. So what does that mean? I want to go over the market back in 2007. But before I do that, is Home Depot, they reported earnings yesterday. Earnings was bad. Warned what's going to come up in the future, here in the near future, that they're going to have lower revenue and lower profits. They basically said wasn't no one fixing up their homes. Home prices are way too expensive. I was talking to somebody today in Nashville, which is a booming town. Booming. Nashville is booming. But housing, there was a house that was around $80,000 in 2017, I believe. And now today that house is selling for $500,000. So what then happened is housing prices have gotten too expensive for younger people to purchase homes. So the baby boomers aren't really selling them. And then there's really nobody to buy them because they're too expensive. So if interest rates do fall, housing prices are going to have to come down so that people can afford these houses, which is really against normal housing logic. Interest rates go down, housing prices go up, but housing prices don't went up too high. They got to come down so that people can afford to buy them, even with lower interest rates. I have a trucker friend who drives for a major retailer, and normally between August and December is the busiest time for a truck driver in this space, taking loads from Intermobile to their warehouse. He ain't working. He gets spotty work, maybe a day, a load here, a load there, but he's not working consistently, where over the last 15, 20 years, it was booming. He couldn't get enough work. He couldn't work enough to get all the loads. And now he can't get no loads. That's letting us know that we're probably not going to have a Merry, Merry Christmas. And I believe we have the stock market correction by the end. I might be wrong, though. But that's what I'm doing. I'm loading up on as many T-bills as I could possibly buy. That's what I'm doing. The 2000, I believe like Meta is a company that I absolutely love. But as their stock price keep going up, I'm going to start selling my shares. And I'm going to put them in T-bills, 5%. I'm more comfortable in T-bills at 5% than I am holding Meta at like 550. And I believe Meta is a great company, and I love Zuckerberg. And I believe the stock got a bright future. I'll come back and purchase it at a later date. But it's getting too expensive now, and I got to prepare for what's to come. So on October 9, 2007, the S&P hit a record high of 1565, closed at a record high of 1565. October 11th, 2007, the S&P hit an intraday high of 1576. That's important. And I'll come back to that. So on October 13th, 2008, the S&P marks its best daily percentage gain ever, 11.58%. Y'all got to remember with these numbers, there was a time of the Great Depression. But they saying that was the highest rise. In 2008, the S&P fell 38.49%, its worst yearly percentage loss. And September 8th, Lehman Brothers collapsed as the financial crisis spread. So think about that. In September, Lehman Brothers crashed, but on October 13th, the stock market had its highest day gain ever. I think that's what's going on right now. So that rise really don't mean anything. Just a pop back. But in March 9th, 2009, the S&P closes at 676. So about a year and a half later, from hitting an all-time high of 1576, it went all the way down on March 9th to $676. Wow. That's bad. That's what I'm preparing for. I'm preparing for something like that. I'm going to be ready for some type of market downturn like that. That's what I'm preparing for. But it ain't all doom and gloom. And the reason why I come on here, I want to make sure I let y'all know this. On March 28th, 2014, about 4 years later, the S&P ends at 1569, surpassing the previous record close in 2007. So we're saying that the stock market went from March 2009 to 676 to March 2013 to 1669. And on April 10th, it hit an all-time intraday of 1589. So that's surpassing the record in in 2007 of 1576. So that means if you ain't even a sophisticated investor and you want to invest in the S&P, something like that, just imagine if you say, okay, I believe we had all-time lows, I'm buying at 700. 4 years later, you up 1569. That's like an annual compounding rate of over 25% annually. That's what I want to come on here and share that type of information. You don't even got to be that sophisticated. All you got to do is be prepared for when the downturn comes. And that's what I'm preparing for right now. Because it's bad. Housing need to come down. Cars need to come down. Stock market need to come down. We're just completely overvalued. And I believe we're going to have a major market correction. Housing and stock market. So I hope that this information was helpful. If it was, please share, please like, please subscribe, and good luck investing.